Good evening, I'm Giuseppe Basile. I'm the NSA trader you can find at the website www.fibstalker.com. I also post regularly on Twitter using the fibstalker nickname. I'm a contributor to fxtrade.com and I publish this newsletter on Saturdays evening and occasionally also give a midweek update. Um, This is the newsletter for December the 14th, 2014. It's 10:30 p.m. time in Toronto, New York, GMT minus 5. And the market obviously are open, the forex markets as well as the futures markets. And what you see on the screen is the daily chart of the euro dollar. In this video, I'm going to review for you the 12 plus 1 markets I follow, and I'll start right away with the euro dollar. So, the euro dollar we know is in a move lower into the next important area of support, which is 121.40 here. That's where participation on the upside might happen for participation due to participation of algorithms. Now, in the last week, basically in the last few days, we saw a reaction higher of the euro, and this is more of a profit taking um, in the dollar index, US dollar versus Japanese yen, rather than actually a manifestation of a strength coming from the euro area. And I'm going to show you how this the current move higher actually it's actually sustained by longs at the moment. When we trace from lows to highs, we saw participation from algorithms at this 123.70, and this has a potential of a price into 125.53 and potentially even 126.48. Now, where this market can go, this market of course is in a corrective move higher before it's going to resume its move lower. I don't believe this market has traction here to go all the way into the halfway back or even higher here. This I believe is a move higher. When it's completed, it's going to drive prices again lower into that 121.40. So we saw this measure move, which we identify after the fact, very very important. And Ibro price participation was seen at 128.63, and first target was at 123.33. Now, even if this has been identified after the fact, there is an important property of the trading system I follow, which allows us to reuse this trace here, and this market is likely to find resistance, that new level, lower level, starting from 127.36. Of course, this market also knew another notable anchor here, another level that was used in the past by algorithms to actually identify level of participation. So we have here two levels. I'm going to watch 127.36 and 128.78, and as you know, I never get involved right at these levels. I have a technique, the VIP stalking timing technique, that I use to get confirmation. I'm going to show you an example on the US dollar Japanese yen later on the 4 hour. And so these are the two levels I'm gonna watch. If price gets into that level 127.36, it's likely to actually find participation on the downside again. A lot of people will invoke these previous lows, but the reason why the market is likely to turn at that level is because of participation of algorithms. Now, So that these are the levels I'm going to watch, and these levels are actually going to bring price back into that area potential support, and potentially even lower. Moving to the SP 500, this market has been correcting very interestingly, very deeply here. And as we can see, let me remove these levels, and I'm going to explain you why these levels are important. First of all, when we get into the weekly time frame here, we see that there was participation at this level, the 1834, 1832 area here, which has a target at 2100 basically. Those who follow me know also that I have a 2500 I have a 2500 target for the SP 500. I don't believe that we will get a sizable selling until we get to that level. Of course, anything can happen in the market, but I have explained that with the participation of program trading at the 667 level in March 2009. So at the moment we have this market in a corrective fashion. If you look at the past video, show the sequence of measure move higher, the extension, the sequence of extensions are here. When that extension failed, eventually this market started a correction. Now we had participation at the all the way halfway back here, and that participation came twice. Once from the recovery of this bar higher into 2049, which brought price into the first target here. We should probably consider this first target hit. So in reality, this market came to retrace all the way halfway back again into the 50% level. So the right trace at the moment is this one. So what can happen to this market tonight? It's a continuation lower into the 1882, or actually this market could correct again all the way into the next measure move short here, and this would be in the area in the 2018 area here. Now, where this market can't stop, there are two levels we're going to watch, and two levels where we are going to adopt the Fib stalking timing technique in order to time the longs. The first level, it's a high to high, it's an extension that comes exactly at that 1968, and let me remove this at the moment. But as you can see, if we keep that first target, if the market gets again into 2018, the first target would be very close, 5 points close to that level. So it's possible that that level is very possible that level is going to act as a support, and the reason for that is also because we saw this extension, this move in extension here. Of course, that there is always the possibility for the market to retest all the way halfway back, and again that's a spot. This the 1939. That would be a very deep correction. That would be a spot to pick this price higher. Moving to the dollar index, the dollar index is actually moving now in a correction, and this price actually went to test the in the past went to test this extension higher here and brought price into the first target, but was never able to bring price into the second target. The market continued higher, but couldn't make it into that 60 9061. Of course, the move higher allowed for the market to break the all the way halfway back. So we know that when the 61.8% level are hit, there is always before or after some sort of profit taking. So if this market now corrects, it can correct to if it corrects deeply, it can correct to 85.64. That would be the next measure move here. If the correction is actually shallow, we're gonna see this price stopping at 87.27, and that would be a continuation higher of this previous measure move into the second target. So if price stops at 87.27, we're going to see we are going to actually see price into the next see I'm gonna actually see price into the next target of this measure move I showed before. And so if the retrace is shallow here, you're gonna see the market continuing higher into potential 91 here. Moving to gold. Gold has been trading into this potential level of it's not potential, but it's a real level of support here, very large level of potential support that's starting at 1232. This is halfway back from the lows in 2002 here, and we saw participation a lot of time 2013, and again beginning of 2014 here, and then again in 2014 has been testing this level quite some time. We know that the sequence of measure move on the daily time frame has failed here, so that's an indication. That was the reason why we saw this move higher, because um, once the sequence of measure move short on the daily time frame has failed, and I mentioned this a few week back, we saw price going above this 1208 20 here, and after that the market continued lower, but as soon as that sequence of measure moves finished, there was this explosion higher here. Now if we look at the initial counter trend measure move here, that has failed but was capable of bringing price into this first target. So there is a possibility for this market to before a continuation higher, to retrace all the way into the next ambush here. This would be the 1184. That's a possibility. So if we see a very severe correction here, that's the level where we could see this market moving to. Of course, this market has been moving in extension as well, although not ordered. So if this market actually continues higher from here, it has been already testing this 12 here, and it's basically one full point, so it's possible for this level to be tested again. If 1206 40 speeds on the downside, that's where we're going to see this market again, and this could be an opportunity to pick up this market again. Moving to the US dollar versus Japanese yen, I want to show you how the sequence of measure move on the 4 hour has failed, and as soon as failed, this market started correcting on the downside. This market has potential participation on the weekly time frame much lower here. But this was the sequence of measure move that could be observed. 114 which were priced into the first and second target, and then the next sequence in the measure move that was followed by algorithms was highs to high here, which were priced into first and second target again. After that second target was hit, the algorithms had to respect the next level. The next level was not respected, so algorithms on the 4 hour lost interest in buying this market, and so this market had no way but start trading a sequence of measure move short, and that was from lows to lows here. Participation on the downside at 119 here, 90, and the price actually now has the possibility to trace into the level again. But the most important thing is that this market is now moving on the downside, potentially is moving back into a new level of support on the weekly time frame. You will remember that back in May last year I mentioned this participation 94 but pressing to the first and second target. If you want to see a review of this trade, you can also search on fxtrade.com Japanese economy and read the article and the review I made of the Japanese economy on August the 1st. And now this market has the potential to come all the way into 112.80, and that would be the level where new participation on the upside would be found with algorithms. So that's quite a deep correction, but that's where the majority of participation is going to be. There is also a potential level of participation from the daily time frame that would be much more shallower. That would be coming starting at 116, but if 1462 is pierced on the downside, then we are going to see that 112.80. Moving to the euro versus the Japanese yen, this market actually has not made it into the level I was looking for just yet. That would be the high to, sorry, not from there, but from a lower level. And you can review my previous analysis as well. Apparently made it there, but actually it's a long distance. We saw price breaking this level, and then my view would have been for this price to reach a 149 150 level. Price almost made it there, but not likely, not totally, not completely. It was 20 pips below the level. Now when we move on the daily, we see already participation on the downside, so there is the potential for this market to correct anyway. And if continue lower, so if it continues lower, it would be 145.64 and potentially 144.34. So all the currencies are moving on the downside, the currencies that trade against the Japanese yen, because of course US dollar versus Japanese yen is moving lower, and so there is a selling of currencies buying Japanese yen, and that happens happening also in the other currency. For example, the pound versus Japanese yen, as you can see, same participation at this 187.47 on the downside. Now this pair is in a very critical position as well. It's between a short area on the weekly time frame and a long um, on the daily time frame here. That can be seen on the weekly as well. So as you can see, this setup that we identified back in October, you remember that I mentioned this with a few weeks in advance, and actually we can trace this in a more precise way here. On this weekly time frame, this was from highs to highs here, and there was participation at this 168.70, and price went into the first target. So now in selling is kicking in, and it can be clearly seen on the daily, and there is the potential for this market to come and test all the way into the next measure move, and that would be from the high to this level here, the 173.25. So at the moment this market is constrained by a larger area of potential resistance here, 184.19 on the weekly time frame, and on the upside 173.25 would be the level that we have to watch. The euro versus the Canadian dollar is correcting on the upside as well, likewise the euro versus US dollar, before testing that 138.56 that I've indicated at the end of May in my review. Now, that doesn't mean that this move has ended. I believe that the euro CAD has still some way to go here. Obviously, it's possible the correction into the all the way halfway back here. It's very possible, and it's possible that when the euro will reach that potential area of resistance, this market is going to reach 147.40, and then eventually, um, eventually getting eventually retesting that 138 56 level again, and that would be a very interesting, almost 900 pips there, something that we have to keep an eye on. Moving to the pound versus the US dollar, we know that this market has a very large full range correction here into 153.55. That is from the lows in 2009 to the highs that we saw just a few months back here. Now, likewise, all the other markets are trading against US dollar. This market could be correcting here, but eventually, when that this correction will be completed, um, there is the possibility, of course, for this market to resume its move lower. Moving to the Australian dollar versus US dollar, no changes for this market. This market we know has the potential to get all the way into this 07939, and on the weekly it has traded recently at the first target of a measure move that can be traced from the highs to lows here. There was participation at the level, the 09749, which eventually after almost a year brought price into um, actually the first target here, and now has the potential to bring price into that second target as well, and that would be just past that 79.32 level. So that's what is possible for this market to happen, and we also have a potential retracement also for this market, of course. And if this market retraces, then there is the potential for this market to get into the um, lows to lows here, an extension shot for a continuation lower. So this market is still moving lower at the moment and could correct as well. Moving to the US dollar versus Canadian dollar, this market actually has been challenging this potential area of resistance here now since some time, and initially it actually behaved accordingly to basket setup, and we saw participation at the first target here of this basket setup, but it almost reached that second target. So if that's the case, if that happens, um, we are not able to use this high here because this is a basket setup, but we will need to see how the market reacted at that level, and we're probably going to use a potential notable level here, which could be for example this level here. That would be one of the levels that we're going to use because of this measure move. So that's what I'm gonna see, what I'm gonna use after we break that level. If we break the higher level here on the weekly, this market actually is in a very good spot to then start eventually retesting the all the way halfway back here from 2000s to 2007 here lows, and that would bring this price eventually into the 126.28, making very expensive buying goods in the United States. So we'll see what happens there. Next, second last year is the New Zealand dollar versus US dollar. This market, as you know, went to retest the 077 level here, which acted as a support in mid 2013 here, bringing two nice measured move higher. This was retested three times now, and again it's coming out of this level. So I mentioned already that if this market corrects higher, is going to encounter now a new level of resistance. It is the 08011, and we will see what happens when the market gets there, if the market gets there. Last but not least is the US dollar versus the Swiss franc here, which on the weekly time frame is trading this extension long 08843, identified after the fact. But when we move to the daily, there was an interesting long here being identified, and that was from the high to highs, and that actually identified the first level of target. The price got very close, very similar to the euro versus Japanese yen here, but not into it just yet. And this is real participation here at this 09361, so eventually we will see price moving into that level. And we also had another inner measured move, daily measured move, which has the same first target in that area. So potentially, if there is a jerk higher in this market, it's going to bring price into the level, and only after that we will see a potential retrace into the next measured move yet. I'm not gonna trace just yet. So if price gets back into 095.50, we will see another test, second test of this measured move here, as price did not get into the first target. This is it for this week review. If you are interested in the way I look at the market and trace this move, as well as identify setup, consider I opened the enrollment for the January session of my coaching program, and if you are interested, just drop me an email and with the words more info, and I'm going to provide you with additional information. Thank you very much, and have a great trading week next week, and I'll see you soon. Bye bye now.